Hey everyone, welcome back to another episode in DIY investing education. In the last episode we spoke about ETFs, and today we're going to talk about another concept you need to understand about ETFs: management fees. Right, so ETFs are very convenient, obviously, like we discussed in the past episode, but in today's episode we're going to figure out, and I'm going to explain to you how the ETF management fees work. How much are you actually paying in fees to invest in an ETF versus picking and choosing your own individual stock? So the best way to learn about this is to go through a few examples. And by the way, by law, Canadian ETF providers need to display, or they need to tell you what the management fees are, what are the costs associated to any ETF. So if we scroll down, usually you'll see it in the fund details or product details section of the ETF itself. You will see a few things: the management fee, the management expense ratio, and you might even see the trading expense ratio. So what do each of these mean? How do you calculate exactly how much you are paying, for example, to own this ETF, the Global X S&P 500 Index ETF, stock symbol USSX, trading on the Canadian stock market? So the management fee you see here is 0.08%. The management expense ratio is 0.09%, and then you have a trading expense ratio, which is 0 in this case. So what do these mean? Well, the most important one, in my opinion, to look at, that one that gives you the one that gives you a clear big picture of how much you're actually paying, is the management expense ratio. So the management expense ratio, aka the MER, includes all management costs, including the management fee. So the MER will include the management fee. You are not paying the management fee plus the management expense ratio. The management expense ratio is the entire expense of the fund when it comes to managing the fund, if you will. So it's 0.09. So what does that translate into how much you're paying? Well, the easiest way to do it, this is on an annual basis, by the way. So let's say you invest $1,000 into this ETF. If you do 1,000 plus 0.09%, the MER, it's basically 90 cents. So for every $1,000 that you invest in this fund, you are paying an annual management expense ratio, an annual fee, if you will, of 90 cents. Very, very low, obviously, but of course it depends on the ETF and how much management and work they're putting into it, right? This is an S&P 500 index ETF, so there is actually very little management, if you will, because it just tracks the S&P 500. So you're mostly paying for the administrative costs of the ETF, if you will, and the MER will also include the taxes as well, right? That's why it says management fee plus applicable taxes. Well, the MER will include all of that. So let's go to another example, and we'll stick with the S&P 500. This is the Global X Enhanced S&P 500 Index ETF, stock symbol USSL. So this one is still the S&P 500, but it uses a modest amount of 25% leverage. So the fund itself is borrowing some money to amplify, for example, the effect of the S&P 500. So instead of borrowing money yourself to invest, right, taking leverage yourself, there's ETFs like this one that actually kind of do it for you. So it's this fund that's actually borrowing 25%, some modest amount of leverage. So if you look at the management fee, the first thing you'll notice is that the management fee is a little bit higher. It's actually much higher than the last one because there's more costs involved in managing those borrowing costs. Then you'll also see the management expense ratio is over 1%. So don't forget that the management expense ratio already includes the management fee. You're not paying both of them. You are only paying the management expense ratio and the trading expense ratio as well. Trading expense ratio, that, sometimes it's 0, and usually it's very little. It's so little that sometimes you won't even see it, the trading expense ratio, unless you really look for it in the documents. But Global X Canada, very, very transparent. They're even showing the trading expense ratio. So the first question is, why is the Management fee, we've already answered that, right? There's more management that goes on in this ETF because they're managing the leverage. But another thing to remember for these leveraged ETFs like this one is that the borrowing costs, the leverage costs, or the interest cost, if you will, that the ETF is paying to borrow the money is going to be included in the management expense ratio. Right? When you borrow money, you got to pay interest, right? So this ETF is doing the same thing. It's also paying interest. So the management expense ratio is 1.35. And there's also a small trading expense ratio of 0.03. So to calculate how much you're paying annually in terms of fees by holding this ETF, I would do 1.38, right? The management expense ratio plus the trading expense ratio. So if you do 1,000 plus 1.38%, you'll get your number. It's $13.80 a year for every $1,000 that you invest. Let's move on to another one. This is the S&P 500 Covered Call ETF, USCC. So if we scroll down, you'll see that the management fee is 39 basis points. The MER, which is the more important one, which includes the management fee again, is 49. So management fee, 39 basis points, management expense ratio, 49 basis points, and also a small trading expense ratio of 0.03. So for this one, if you want to calculate the cost for every $1,000, you do $1,000 plus 0.52%, right? 49 basis points plus 3 basis points equals 52 basis points, or 0.52%. So this would cost you approximately $5.20 fee for every $1,000 that you invest. Last example, USCL, the Global X Enhanced S&P 500 Covered Call ETF. So you see the theme here. This is the S&P 500 by itself. This is the S&P 500 with 25% leverage. This is the S&P 500 with a covered call strategy, a covered call overlay. And by the way, plenty of covered call episodes coming up to explain what that is. And this is the enhanced covered call version. So this has 25% leverage and covered calls, which means this is, pretty much the most expensive one to run because there's the most management. Right? There's covered calls and there's leverage. So the management expense ratio, which includes the management fee, which includes the leverage or the interest costs as well, is 2.18. There's a 4 basis point trading cost here as well, trading expense ratio. So for this one, for every $1,000 that you invest, you're basically paying 2.22%. Again, very important, includes the leverage costs. So you're paying about $22.20 for every $1,000 that you invest. So this is how management fees work, everyone. Just to sum up, very important you understand the difference between the management fee and the management expense ratio. The one you're really going to want to look at, focus on the most, is the management expense ratio because it includes the management fee. Another point, there's sometimes is a small trading expense ratio, but it's typically very, very small or non-existent. And a third very important point to remember is that you can't just look at management expense ratios and see high numbers and say, oh, well, this one is really, really high fee. It's not a good ETF. The important thing is to remember the strategy of the ETF. And, in this case, this ETF here, USCL, runs a cover call strategy and it has 25% leverage. USSL is just the index, but it does have 25% leverage. So, of course, the MERs have to be higher because they will include the leverage cost. So it's very important you understand the strategy, what the ETF is doing. Now, that sums it up. That's pretty much it for the management fees. Now, in the next episode, we will talk about something that's extremely important. I can't say more than that, everyone. This is the most extremely important thing to understand. We're going to talk about total returns, or the performance, how to look at the performance for certain ETFs. What exactly does the performance mean? So we're going to take a look at that. And it does tie into management fees as well a little bit. So stay tuned for the next episode. Very important to watch it and understand how to basically judge the ETF, how well it's doing. The number one metric you should always be looking at is performance and total return. It's not stock charts. It's not management fees or management expense ratios. It's Total return, I like to say that total return is the ultimate truth. Performance is the ultimate truth. Why is that? We'll find out in the next episode. Thanks, everyone.